Welcome everybody to our Homestead Exemptions webinar. We're going to cover a lot of information related to homestead exemptions. And then at the end of our homestead presentation, I will also cover information about the disaster exemption so that you can also get information on that one. But we're going to cover homesteads first because a lot of property owners have not claimed their homestead exemption. And it's a very powerful tool for property owners to save some money on their taxes. We want to make sure that everybody that is eligible to claim an exemption claims one. So I will go ahead and get started. If you have any questions at all, please feel free to use the Q&A. We will monitor those. We'll have somebody actually answering those questions live while the presentation is going, or the question may be held if it's something that we see happen a lot for us to answer at the end of the presentation, and we'll try to get to as many Q&A questions as we can at the end. So starting off, exemptions. What is an exemption? Well, an exemption is a deduction from your taxable value, and your taxable value times the tax rate equals how much you have to pay in taxes. So it can be very important for you to make sure that you're claiming any deductions that you can on your property taxes. And the state of Texas offers a variety of partial and complete exemptions from local property taxes. All property is taxable unless it is specifically exempt by law. And in most circumstances, an application is required. You've got to file an application. Now, for the general homestead exemption, you only have to file that application once. It's not an annual application that you have to file, but you do have to file that initial application. The application is generally due April 30th of each year, but there are some exceptions that will allow for a late application, and we'll cover that a little bit later. And then the exemptions can either be state mandated or local option. For the most common homestead exemptions, they are state mandated for school districts. So all school districts must grant a homestead exemption. However, they can be local option for other taxing entities. So it's a local option for your city or your county or a MUD or any other jurisdiction. But for school districts, it is always going to be state mandated. The most common one that general residential homestead exemption is the most common one that people will qualify for. And this is for an owner-occupied residential property, and it lowers the taxable value of your property by $25,000 for school districts, because again, school districts are state mandated. It also invokes the homestead cap value, and you hear about that. It's a 10% limitation on increase on your value. Now, it's really important when we talk about that limitation that you understand that it's a limitation to your assessed value, not the market value. The market value is going to be determined by what happens in the market, what your property can sell for in any given year, and market value is not limited, but your assessed value is limited. And the assessed value is calculated as the prior year's assessed value plus 10% or the current market value, whichever is lower. Now in Austin, our market and our real estate market is usually very robust, and it's rare that we will see a downturn, but it has happened in the past. We saw it during the Great Recession of 2008, 2009, where values went down, and in some cases, the current market value was the lower of the two numbers. But again, it's really important when you've got your homestead, it does give you that cap, that increased cap, but that applies only to the assessed value, not to the market value. And again, school districts, it is state mandated. They must grant you a $25,000 homestead exemption. Other taxing units may approve an exemption, but it cannot exceed 20% of the property's value. So for example, City of Austin grants a 10% homestead exemption. Travis County grants the maximum 20%. And it is up to the local governing bodies of those taxing entities to determine how much of a local option exemption that they are going to grant. And it can be different for each taxing entity. A general homestead exemption, in order to qualify, the property must be designed and adapted for human residence. So you can only claim it on a residence. And the owner must own and occupy the property on January 1st that is the qualifying date. You must own it on January 1st. So if you purchase a property in March, April, or May, you're not going to qualify for the residence homestead exemption for that first year. You don't qualify until you hit the next January 1st. So anybody that purchases a home, this month, next month, you won't get it for 2021, but you will get it for 2022 when you own and occupy the property on January 1st. The other thing that you cannot do is you cannot claim a homestead exemption on any other property, and that's in this state or out of this state. You can only get one homestead exemption in the state of Texas, and you may only claim it once. And again, also, you must file an application for that very first year to claim that exemption. But after you file your initial application, it's not required that you reapply for that general homestead exemption unless the appraisal district has audited the records and asks you to reapply. But generally, you do not have to reapply. For people that are over age 65, there is an exemption for being over the age of 65. And that one will lower your taxable value by $10,000 for school districts, because again, school districts are state mandated, so they will reduce your taxable value by $10,000. The really big benefit of the over 65 exemption for school districts is it establishes a ceiling on your taxes that limits how much you pay in school taxes from that point forward. So in the year that you qualify for your over 65 exemption, that will put a ceiling on your taxes, and your taxes for the school district will never go above that amount. It could go below that amount, but they will never go above that amount. So you now have a ceiling on what your school taxes are. And since school taxes represent almost 50% of the total tax bill that you pay, that's a significant benefit for property owners that are over 65. Again, only the school districts are state mandated and have the tax ceiling by state mandate. If you're over 65, you can also transfer that. If you decide to move to be closer to your family, you can transfer that tax ceiling with you when you move to your next location in the state of Texas. So it is portable, that tax ceiling for you. Other taxing units, again, it's state mandated only for school districts. Other taxing units may adopt an exemption. In this case, the exemption for an over 65 adopted by taxing unit other than a school district is done in a flat amount. So it's a flat dollar amount. For example, Travis County grants $88,000 and the city of Austin grants an $85,000 flat amount. That is another amount that is taken off of your taxable value to calculate your taxes. They may also adopt a tax ceiling similar to the school districts, but that tax ceiling would not be portable. And again, it is something that is local option, meaning the taxing governing body of the taxing unit has to vote to approve a tax ceiling, and they're the only ones that have also adopted a tax ceiling. The others have not adopted a tax ceiling for over 65 exemption. To qualify, you must be over the age of 65. Your property must be your principal place of residence. And again, you cannot claim this exemption on any other property. If you're a surviving spouse of somebody who is over 65, you can also qualify for the exemption or inherit the exemption from your spouse, so long as you were age 55 years or older when your spouse died, and your spouse was receiving this exemption or would have qualified for it in the year that they died. So if you're a spouse of somebody that is age over 65 and older, you can inherit the exemption and all of its benefits, to include the tax ceiling. If you are a disabled person, there is an exemption also specifically for people that are disabled, and it operates very much in the same way that an over 65 exemption offers. Usually we will see this if you're getting Social Security Administration Standards of Disability, SSI. If you're receiving SSI disability, you would qualify for the disabled person's exemption. And it, just like the over 65, it lowers your taxable value by $10,000 for school districts and establishes the tax ceiling. So again, it limits the growth of your school taxes in the future. And again, it operates very much similarly to the way that an over 65 operates. Again, other taxing units can adopt the disabled persons exemption. They will do it in a flat amount, and usually they keep them in parity. So again, for Travis County, they will offer the $80,000 plus exemption. Same for the city of Austin. They could also adopt a tax ceiling similar to the school districts. Again, only the city of Cedar Park and city of Leander in Travis County have opted to adopt the tax ceiling. You cannot transfer the tax ceiling if it's a non-school district tax exemption. To qualify, you have to have a medically determined physical or mental impairment. The impairment must prevent you from engaging in any substantial gainful activity, and it must be expected to last at least 12 months or result in death. And also for disabled persons, just like the over 65, a surviving spouse of somebody with a disability may also inherit or continue with this exemption. Again, if your spouse was receiving the exemption in the year that they died and you are age 55 or older, you can inherit the exemption. Now, you can only get the over 65 or the disabled persons exemption. You cannot claim both of those. So you get a choice of which one you want to select. You can apply for both, but you can only claim one of them. So if you're somebody who is over 65 and both disabled, you can only claim one or the other. You cannot get both of those. And so you'll need to look to see what your taxing entities are granting in terms of the exemption amount. There may be some cases where a city may only offer $10,000 for the disabled person, but they offer $50,000 for an over 65. In that case, for that taxing entity, you're going to want to claim the over 65. But for another taxing entity, you may want to claim the disabled person's exemption. So you'll need to pay attention to the exemption amounts that are being offered by the taxing entities. Again, most taxing entities make them the same. And so it's really your choice, but there is maybe one or two exceptions. We provide that information on our website under our exemptions tab. You can find out more information about your taxing entities and what amount of exemptions they are granting so that you can make the choice, but you have to tell us which one you would like to claim. If you are a disabled veteran and you are 100% disabled, you can apply for 100% disabled veterans. And that exempts them from taxation on their residence homestead. And that's an exemption from all taxes from all taxing entities. But to qualify for this, you have to be receiving 100% disability compensation due to a service-connected disability and have a 100% disabled or individual unemployability rating from the Department of Veterans Affairs. And with the application for the 100% disabled veterans exemption, you need to provide a letter that you're going to get from the Department of Veterans Affairs as part of the supporting document when you claim that. Surviving spouses can also inherit this exemption, but they cannot be remarried and they have to continue to own and occupy the property. But again, it's really important if you are disabled veterans, you must be 100% disabled, but it has to be a service-connected disability. You can be a veteran that's 100% disabled, but it's not service-connected. You would not qualify for this exemption. But if you are 100% disabled due to a service-connected disability and have a rating of 100% disabled or unemployability, you can get a 100% exemption from all property taxes from all taxing jurisdictions. And this is state mandated. If you are a disabled veteran, but you're not 100% disabled, there is an exemption for disabled veterans that is determined based on the percentage of your disability, and you can apply for that. And that one would apply not only just to residential homesteads, but you can make that apply to any property that you own. So if you own a business or if you've got some land or rental property, your disabled veterans exemption can apply to those properties as well. It's a much smaller exemption amount. It goes anywhere from $5,000 up to $12,000. But again, it is a deduction that would help you with your taxes and reduce your taxable value. So disabled veteran is also something that is available for you, that if you're not 100% disabled veteran. To qualify, the veteran must be classified by the Veterans Administration as disabled with a service-connected disability of 10% or more. You must be a veteran and a Texas resident. And again, your surviving spouse can inherit that exemption as well. as long as they have not been remarried and are also a Texas resident. For surviving spouses of members that have been killed in action, or for first responders that have been killed in the line of duty, you may also qualify for an exemption. And this is another 100% exemption from all property taxes from all taxing jurisdictions. And it is state mandated. Again, if you are the surviving spouse of a service member that was killed in action or of a first responder that was killed in the line of duty, you can also qualify for 100% exemption from all property taxes on your residential homestead. To apply for this and any other exemption, there is an application, and those applications can be found online on our website. You need to complete the required application, include copies of any documents that are required, and submit your application to the appraisal district by April 30th. It is free to apply for your exemption. A lot of new homeowners will get solicitations from people wanting to charge you $50 to $75 to apply for the exemption. There is no fee. You do not have to pay anybody to file your application. You can do it yourself. And again, it is free to apply for your exemption. Some of the required documents that you're going to have to apply or provide when you apply, the important one to remember is you've got to apply and provide a copy of your driver's license or Texas ID card. And the address must match the address of the property that you want to claim your exemption on, particularly if it's a residence homestead. The address on your driver's license must match the address of the homestead that you're trying to claim your exemption on. And it must be we can only accept a Texas driver's license or a Texas identification card, the official Texas identification card. We cannot accept a passport. We cannot accept any other form of identification, your concealed carry card. We cannot accept those. It can only be a driver's license or the official Texas identification card by law. And if your name's not on the deed, you must also provide information that provides compelling evidence to establish ownership. We also see, a lot of times married couples, only one person's name has been listed on the deed, but you're a married couple, so you both have joint ownership. You just provide us some evidence and documentation if your name is not on the deed that you are in fact the owner of the property, so that we can identify that appropriately. If you are age 65 or older and you provide your driver's license, that's going to give us your date of birth. So that will be sufficient for us on your age over 65. If you are disabled, we're going to have to get proof of disability. Most commonly, that comes from Social Security, and they provide you a Social Security disability letter. If you are a disabled veterans, you're going to get a letter from the Veterans Administration that you're going to want to include in your with your application. And then if you are a first responder, then you're going to want to provide a letter from the Employee Retirement System of Texas as part of the required documents for that exemption. If you are the heir of a property, you now have some additional rules for eligibility to claim a homestead on an heir property. A lot of times, if property is in the hands of a family for a long term, the deed is not always processed and as clean as it should be. There is an opportunity for eligible heirs of a property to claim a homestead on the property that they have inherited. It requires that you provide an affidavit establishing your ownership and heirship, provide a copy of the prior owner's death certificate, a copy of the most recent utility bill, and a citation of any available court records, and then also sign an affidavit authorizing submission of the application. And that's an affidavit from the other inheritors or potential heirs of the property, authorizing you as the occupant to claim a homestead on the property. So if you are an heir and your name is not on the deed, there are some opportunities for you to claim the homestead exemption, but there's some additional required documents that you must provide in order to claim that exemption. Common concerns that we have from people is if you've got multiple people, like a married couple, are on the deed, do they both have to sign the application? And the answer is no. Only one of the applicants needs to sign the application. And if you are over 65, then the person that is over 65 should be the one that signs the application. You can only receive a homestead exemption on one property in the same year, so you may only claim it once. If you buy a new property, you can claim the exemption on the new property in the next year, but you cannot have dueling or simultaneous exemptions on multiple properties. And you may be eligible for multiple exemptions. So you can layer some of these exemptions on top of each other. Of course, the general homestead you will claim, and you will get that exemption if it's your principal place of residence. On top of the general homestead exemption, you may also claim either the over 65 or the disabled persons, one of those two, but that is in addition to your general homestead exemption. And then if you are 100% disabled or a first responder, surviving spouse of a first responder or somebody killed in action, you can claim those exemptions in addition to your homestead, although those are 100% exemptions and will supersede any benefit that you will get from the other two other exemptions that you might be eligible for. The exemptions, again, reflect the owner of the property as of January 1st. So again, you can only claim it if you own the property as of the qualifying date, which is January 1st. And you can claim that exemption. If you purchase your property later in the year, you'll be eligible to claim that exemption in the subsequent year. And then you may have an opportunity to file a late homestead application. For a general homestead exemption, you can file a late application up to 2 years late. So there's still an opportunity if you missed the April 30th, or if you did not previously file for that exemption, you can still claim a homestead exemption. Again, you have up to 2 years, you can claim a homestead exemption. If it is a disabled veterans exemption, you can claim that one up to 5 years late. So there's still an opportunity for you to claim an exemption and submit a late application to claim an exemption. If you need more information or you have any additional questions, you can always reach out to us on our exemption helpline, and that number is 512-873-1560. Or you can go to our website and look at our website. That's www.traviscad.org/homestead exemptions. And we've got some FAQs. Also, our exemptions are available there as well. We certainly encourage people to submit their applications. We've got an online application, which can certainly ease the processing time for us for you if you do file it electronically on our website. Now we'll talk a little bit about a disaster-related exemption. And this is a new exemption that was adopted by the legislature and constitutional amendment in 2019. And it would certainly apply because we've had an event that would make a qualifying event for this disaster-related exemption. So it's a temporary disaster exemption, and property owners who suffer property damage as the result of the 2021 winter storm may be eligible for this temporary exemption. And again, it is because there was a disaster declared by the governor, and the damage done by this disaster was absolutely physical damage. You may qualify for this temporary disaster exemption. The exemption applies to qualified property, and the legislature has defined qualified property as being tangible business personal property used for the production of income if the owner files a 2021 rendition. It also qualifies, qualified property is listed as an improvement to the real property, which would include residential buildings, your homes, commercial buildings, industrial buildings, multifamily apartments, and other real property buildings, and also to certain manufactured homes and dwellings. But it's important when we talk about what is qualified property, that land is not considered and was not listed as qualified property. So the exemption will apply only to the structures or the improvements to the real property, and it does not apply to the land. In order to qualify for the exemption, the disaster exemption, the qualified property must be a minimum of 15% damage. Again, the statute is you've got to have received at least 15% damage in order to qualify for the exemption. And they set out damage assessment levels. There are 4 levels, a 1 through 4. If your property is between 15 and 30% damage, meaning it's minimal but maybe continue to use as intended, the exemption percentage that will be applied will be 15%. If you are at a level 2 and your property had 30 to 60% damage, and that's non-structural damage with a water line less than 18 inches above the floor, then you can get a 30% exemption. A level 3 is if you are 60 to 100, less than 100% damaged, and that's significant structural damage or water line above 18 inches above the floor, then the exemption amount will be 60%. And the final one would be a level 4, which is 100%. It's a total loss and the repair is not feasible for the property. We suspect that we will see most property owners that qualify for the exemption will probably fall in the level 1 or level 2 category. So how do you calculate that in that percentage and make that assessment? And the appraisal district will make that assessment of your damage level. Again, as I stated before, it only applies to the improvement. So here's an example of a property. If the improvement value, and you can see that on our website, if you go to our property search, you'll see what your improvement in land value. In this example, the improvement is valued at $230,000. The land is at 110 for a total property value of 340. We are only looking at the improvement, and we're only looking at the improvement value, both for the calculation of the percentage damage and also for the calculation of the exemption amount. If you provide us damage and cost estimates that say that it's going to cost you $46,000 to repair your property, 46,000 is 20% of 230. So this property would qualify for a level 1 damage assessment. And the level 1 damage assessment exemption percentage is 15%. So we're going to calculate 15% of $30,000 would be used for the calculation. In addition to the exemption percentage, the disaster exemption is also prorated based on the number of days remaining in the year from the date that the governor declared the disaster. So in this case, there's 322 days remaining in the year divided by 365. That gives a proration percentage of 88. So your exemption amount is $34,500, but the prorated exemption amount will be $30,530. And that would be the amount of the exemption that you would get for your property. There is an application that you must apply, use and submit the application. We have put this on our website. The application is on our website. So please go to our website and submit the application if you feel that you will meet the requirements, the 15% damage, and you've got damage related to the winter storm. Submit the application and include any supporting documents such as inspections, photos, repair estimates. If you've got estimates from your insurance adjuster or insurance claims, those are also good parts of information that you can provide on our website. As you're submitting your application on the appraisal district's website, we also have a calculator that you can utilize so that you can kind of get a feel for what your damage assessment rating will be. Again, there's the 4 levels. If you're between 15 and 30%, the exemption is a level 1, and that's a 15% exemption. If you are 30 to 60%, that is a level 2, and that's a 30% exemption. If you were between 60% and 100%, that is a level 3, and that's a 60% exemption. And then if you are 100% total loss, then that's a level 4, and that is a 100% exemption, disaster exemption. We have more information for you on that on our website, and that's www.traviscat.org/disasters. And again, please go to our website. We will be doing another webinar in March, on March 17th, more about appraisal information for new property owners. We will repeat a lot of the same information that we've done on exemptions and things that are available to you. And that is on March 17th at 11 a.m. And now I will go and look at any of our Q&As. And the first question is for an over 65 exemption. Is it automatically applied, or do you have to apply for it? And the answer to that question is that if you've already claimed a general homestead exemption and we've been given a copy of your driver's license and we know your date of birth, then we can automatically apply that exemption, the over 65 exemption, for you. The issue is a lot of times in years past, the driver's license was not a required piece of documentation, and we don't have your date of birth. So we can't automatically apply the exemption because we don't know when you turn over 65. So always, to be safe, in the year that you turn 65, as soon as your birthday happens, you can submit your application for over 65, just to ensure that the appraisal district has all the information that it needs for the exemption. The other question is for the temporary disaster exemptions. What if repairs are made before the end of the year? It does not matter if you make your repairs. If you suffered the damage and it was at least 15%, you still qualify for this exemption, regardless of whether or not you have already made your repairs. So you can still claim the disaster exemption because you suffered the damage, even if you have already repaired the damage. So feel free to submit the application. We understand that it's been very difficult for a lot of property owners to get plumbers and adjusters to come out and do those assessments for them. So, you know, there's time. The deadline for filing the disaster exemption is May 28th. So you still have some time to submit your application. Again, do it online. If you have your own estimate, just provide us your copies, your photographs, your insurance claims, your description of the damage that you have. Give us the information that you have available, but certainly the best information that we can get is those estimates in order to provide us the official information that we need in order to calculate your disaster exemption. The next question is, can we go online to determine if the district has our date of birth in the system? No, that is confidential information that is not published on our website at all. So that information is not available online. Again, it's always best just to, if you don't think that we have it or you're not sure that you've provided to us in the past, just submit an application with your over 65 and include a copy of your driver's license. And that would be best practices, but we do not publish anybody's birth date on our website, and we do not make that information publicly available. Can you lodge an over 65 application before your actual birthday in the year that you turn 65? No, you must meet the requirements in order to claim the exemption. So do not file it before your birthday, but as soon as your birthday happens, you can submit that application because now you meet the qualifications. We can't grant you the exemption until you meet the qualifications. Can the forms be mailed to taxpayers and returned by mail? We will mail an application for a general homestead exemption if you don't already have one on file when we send your notice of appraised value, and you can return that to us by mail. Otherwise, we have the applications available on our website that you can download and print and return by mail if you would prefer to do that. And that is all of the questions that we see. Again, we'll be doing our next webinar March 17th, so we invite you to come back. We'll provide some more information for homeowners about exemptions. And that is everything that we had today. Hopefully you found this information valuable and got some good information. And again, we encourage you to go to our website and for any of our applications for exemptions, for both general homestead, over 65, and the disaster exemption, those are all available online, and you can submit that application online to on our website, and we certainly encourage you to do that. Again, thank you for your time and attention, and we will see you at our next webinar.